Hi guys, thanks for tuning in to another episode of Nuggets News. Today we've got a guest who I think you guys are going to love. That's Tyrone over in the US, who's a crypto asset advisor, financial planner. So you're going to talk to us about how you view a portfolio. So welcome to the channel.
Thank you so much for having me. This is really, really cool. I appreciate it.
So what's your background? How did you get into financial planning, and then how did that lead you into the world of crypto?
Man, so I'll kind of keep the long story less long, but I started out, as we were talking to before we started, on Wall Street doing investor relations for, a lot of notable firms, the Movados of the world, Estee Lauder, so on and so forth. Help writing press releases, doing conference calls, road shows, things like that. And had a mentor there who worked at Lehman. And he was like, have you considered working on the retail side? And I'm like, well, what is that? He's like, actually working with individuals. So series of step after that, left there, went to a small brokerage house, got my 7 and 63, which are the licenses here you need to manage and sell securities in the U.S., learn to cold call and pitch stock and all of that. And then found my way to Merrill Lynch, where I met my current mentor, who taught me all about building portfolios and managing a book of business and actually how to be a financial advisor. Left Merrill Lynch in 2017, and now I've gone independent and been on my own ever since.
So what was the attractiveness of crypto, or is that just one aspect of what you do now?
Great question. So in 2015, I had a friend of mine who was a Ruby developer, and he was Bitcoin, Bitcoin, Bitcoin. I'm like everybody else, it's fake, right? It's internet money. And he just kept pounding on me, right? No, you need to pay attention to this. Is the next big thing, I'm telling you. And I started to listen because, one, he was always the nerdy techie guy who was off the grid, really into things.
Yeah.
So he's like, just do me a favor, download Bread Wallet. I'm like, all right, whatever. I'll play along with this goofiness. I downloaded it, and he sent me some Bitcoin. And I looked and I saw the transfer happen right in my face in real time. And I'm like, whoa, I got to pay attention to this, right? So he's like, all right, I got somebody else now. You're going to say it was $5, I believe. He's like, you're going to send that same $5 to them. And then I sent it. And I was like, wait a second. And, here in the US, right, we still don't have a real-time payment system. So it takes 3-4 days, or sometimes up to 7 days for money to clear. And at that moment, I'm like, all right, I got to pay attention to this. So he put me in a Facebook group chat with a bunch of really super smart people, computer scientists, engineers, cryptographers, the whole deal. And I'm looking at this and I'm like, I have nothing to add here. But I'm like, they're giving each other some horrible investment advice. So that's when the light bulb went off. And I'm like, all right, I got something here. I need to run with this. And I'm just going to learn as much as I can about it. And here I am.
And obviously everyone in the crypto world, YouTubers included, says none of this is financial advice, but you actually are a financial planner. But I guess today the message is you can't give people individual financial advice.
Yeah, right. Can't give individual financial advice. Nothing I say is financial advice. And what's funny about that is I listen to a lot of podcasts, listen to a lot of things, and it's like for the first half hour, they're giving financial advice. and then they're like, oh, by the way, this isn't financial advice. So
yeah, I definitely
we get that out of the way.
I definitely try and tell people this is what I do and how I think about it, and I could be wrong. So how do you think about crypto in an overall portfolio, and how does that differ from someone that's very young versus someone that's very old?
Great question. Demographic issue, right? So those that are younger obviously look at crypto differently than those that are older, that have made their money, that have concentrated. Now they're looking to diversify. If you're young, right, let's look at the demographics here. The oldest of what we call Gen Z is 24, 25. Youngest millennials, a couple years older, oldest being 37. So let's go back to when the iPhone was invented, which was 10 years ago, right? 12 years ago. Those folks grew up with it, right? So it's very familiar to them, which is why Coinbase exploded, because it was an app that I can go on and eventually I'll buy it. Yeah. So I say all that to say, for a younger demographic, this is for a lot of them, it's their first investment. For a lot of them, it's their first introduction to money and taxes and the whole financial system. And they look at it as a wealth generator, right? They may look at it as a viable asset where they can actually store some money, right? Stacking sats is the thing.
Yeah.
I don't have older clients. My book is my clients in my book of business is very young. But for older clients, and I think I do talk to a lot of advisors there, the older clients want to have a conversation about it because to them, the ones that can wrap their head around it, you get into the whole digital gold conversation.
Yeah.
Yeah, go ahead.
I was going to say, I want to talk about traditional markets later a little bit, but you raised an important point about how this is their first investing experience. And we've seen the explosion of, Arbra, the eToro, all these other apps that are giving people stock exposure. So are you noticing that trend that a lot of people are saying, oh, I've never really thought about stocks before, but now it's an app, I'm getting into it?
Absolutely. It's happening big time. So especially here in the US, one of the things that I always talk about, especially on my Twitter, is for people of color in this country, I've been trying to get them into the markets for a very long time, and they would never do it. But 2017, they jumped in with both feet with crypto, and that brought them to the equity markets. That brought them to the bond, the bond market. It brought them to the options market. So a lot of people discount that. So now, again, you have a whole new group of investors. Again, right? Crypto was the first asset class in history that was led by retail. That's a very big thing, especially for financial advisors, because we are the conduit between the individual, right, and the financial market. So we saw firsthand what was going on in 2017 because these were our clients, these were prospective clients, these were friends, these were family, and they're all coming to us saying, well, what should we do? But just to tie up your question, I think what is not discussed at all and enough on Twitter, on podcast, is exactly what I alluded to, was how demographics come into play. The Bitcoin versus gold conversation is not a real thing with younger clients. Gold is not in the conversation, right? Bitcoin is all encompassing, right? And as far as putting it in a portfolio, most of the portfolios I see, if I'm being honest with my clients, it's mostly crypto. It's trying to get them to diversify away from crypto. So I don't really have conversations about 1% to 5% or whatever. I never have those conversations. They come to me with a portfolio that's fully built, and they want my advice on basic financial planning and some other things. And they only come to me because they know I understand the space well. They know I know what DAI is. They know I know what Quant is, and Bitcoin Cash and forks and the whole thing. But they don't care what I think about Bitcoin or Monero or Zcash. They're going to own it regardless.
We're going to talk about the GFC a little bit later as well, but do you think one of the reasons that millennials haven't had much of an interest is because they've heard about how, I know personally my parents lost a lot during that time?
Yep, absolutely. I mean, again, that time frame, that 2 to 3 year time frame, look what happens there. The invention of the iPhone, 6 months later, you get 6 or 8 months later, you get the App Store. So now what's going to happen a couple years after that? Coinbase comes along, right? But you go the iPhone, you go the App Store, you go Bitcoin white paper, right? Bitcoin 2009, right? So, the financial crisis there, all of that happened within 2 to 3 years. So it was the perfect, maelstrom of events and ideas and opportunities. And Bitcoin was birthed right at the time where, again, younger folks, right? If I'm in my early 20s at that point, or I'm a late teen and I see this happening in my family, and now all of a sudden I am interested in technology, or I do get exposed to this asset that is completely against everything that I've seen destroy my parents' way of living, I'm definitely going to look more into that. And if you look at some of the prominent names in the space, the Nick Carters, the Murads, all of these, they were in college. They were really young. They saw what was going on here. And now, look, they're still very young, and some of the foremost names in the space.
Yeah, I definitely think that's what drives a lot of the passion, even because people know the story about the banks. And next up, I did want to talk about Bitcoin and maybe how I think about a few things in my portfolio. I'd be really interested to hear your views, but I view Bitcoin as the cornerstone, probably the majority of most people's portfolio. Is that the way you think about it as well? Is it a bit of a risk spectrum as we go down the list into alts?
Yeah, so I was saying that actually on one of my videos yesterday, is when you look at some of the portfolios that I've seen and I've worked with, and Bitcoin is the the cornerstone, the blue chip, right? It's almost like that sturdy anchor of a portfolio, and then around it you have some alts. Yeah. And what I said in the video is a lot of times I get into conversations. Okay, well, why do you own the alts? Sometimes it's I own alts to accumulate more Bitcoin. Got it. Sometimes it's I just believe it's going to be an alt season and I'm down 150% now and they're going to run 4,000%. So I'm holding on for dear life. But what I like to do is get an idea for, okay, well, why do you own Monero, right? Why do you own Basic Attention Token? Why do you own all of these different things? But I've consistently seen that Bitcoin has been the largest piece of a crypto portfolio, 100%.
Recently, we've seen some talk around Ethereum even breaking the shackles of being an altcoin. And I tend to agree that it's almost going to get to that point where it earns its own reputation and name separate from the altcoins, and it might even break that correlation. So do you view the next lot of blue chips as the platforms like Ethereum and the others?
Yeah, good question. So I believe personally, right, I'm going on record as saying this, I think the future of finance is being built on the Ethereum blockchain. A lot of people disagree with that, but I think the DeFi movement is really huge. And, you know, there's some really great pieces out on it now. A lot of people are putting out, you know, and again, you deal with a lot of risk now. I want to make that very clear. There's more risk probably than opportunity, smart contract risk and the like, right? You got to put up a lot of collateral. Yeah. But I think DAI is impressive. The Maker DAO, I mean, that's impressive. You know, Ether in itself, you know, you have a whole embedded system there where I think if you look at our business traditionally, they always tell you lead with lending. And that's what you're seeing explode on the Ethereum blockchain. And, you know, you can get into some of the, you know, Tezos and some of the others, and you get into the tokenization of securities and all these other things. I think that's going to explode over the next 5 to 10 years now, right? Wonderful group of developers on, you know, working on Ether, the Ethereum blockchain rather. And there have been some promises that have yet to come through, but I think some really smart, say what you want about Vitalik, he's brilliant. And I think they'll figure that out. But as a financial advisor, and I tell other financial advisors, if you do not believe that the future of our business is not being built on the Ethereum blockchain, you're just not paying attention.
And how do you view the other altcoins? I certainly view them as like planting seeds, as venture capitalists like to do. So I own 20 of them, but they're very, very tiny allocations because if you pick the right ones, there's 10, 20, 100x returns. So there's no need for, because I talk to people and they're 30% in 3 different altcoins that are number 500. And it's like, man, that is just so risky.
Right. Yeah, no, again, I look at it this way. For me, and again, as an advisor, I have a fiduciary responsibility to my clients. I got to be aware of some of these. But again, how many altcoins or how many crypto period can you develop a credible investment thesis on? And I think that's what people have to ask themselves. Yeah. And I think a lot of that has to do with where you get your information, who do you talk to, who do you know in the space. So for instance, what I'm starting to realize is a lot of Bitcoiners have an interest in Decred. Yeah. Decred I knew of, wasn't really on my radar, but I really started paying attention to Decred now. Okay, there's something here. You know, Mimblewimble was the whole thing. And then, you know, you got Beam and all of that. So again, you want to be aware of it, but credible investment thesis, I don't know if you can, how far you can actually go with that. Say, I'm holding this because of so on and so forth. I think after, you know, I mean, you look at that, that top 20 or top 25 of coin market cap, it gets a little tough. But again, I think, and again, you're very seasoned. You do your own research. You know better. So for you, it would make a lot of sense. But for me, if I'm onboarding a new client and they say, well, I own all these alts, and it's like, well, why? Well, I was on GitHub or whatever, and that's not a credible investment thesis, right? Yeah. So I think it's really important. And then just one caveat to that is, even if there are a lot of positions now, as an advisor, what I like to do is, there's a company that I've partnered with called Lumina, where they help me get a read-only view of all of the assets that my clients own, right? No matter where they are, or what exchange, what coins they own, I can get a read-only view so I can get a good look at cost basis, what they own, how much they own, and, you know, start to develop a plan from there.
How do you find the valuation? And I know a lot of people are just viewing this as we don't know what they're worth, but we want exposure to this digital asset, and we're already starting to see indexes come out. And my view is that the majority of money is just going to flow into the large cap coins, because they're worth over $1 billion, so people can park money in there.
Yep.
And people don't know what Zcash is worth or Monero, but there's a currency theme, but then there's also sort of that platform theme, and I just see money flowing to the large cap coins.
Yeah, absolutely. I think, again, right, we saw this week Bitcoin's dominance went over 70%. I think it's just going to continue to suck some of that up. I think, again, you can scroll on coin market cap for a long time. A lot of those coins have to die. They have to go away, and they will over time. But I think some of the larger coins, again, that you can start to develop a clear investment thesis. You can look at the community of developers. You can look at, some of the quote unquote branding that they have, right? And some of the people who are leading the project, some of their governance, things like that, and say, oh, okay, this has some sustainability. And I think you'll start to see that over time, because I forget who did the research, but if you go back 5 years and you look at the top, 20 coins, and then you look at it now, totally different. Right. So, and then I think if you look 5 years in the future and then look back now, then it'll be a difference as well. But I think what you'll start to see as Bitcoin starts to get more of a stronghold over the financial system in general, I think you're going to see a lot more flow into it, because that's the one just with the biggest brand. And, the top 5 or so have the biggest brands in the space right now, and the recognizability, and people would just flow there because, oh, I heard about this, right? So
yeah. So one of the things that we've always focused on is fundamental analysis, and sometimes it's frustrating that a project I think's got great fundamentals isn't going anywhere. And you touched on Decred, and I think the people that are coming into this from the financial world are definitely likely to do fundamental analysis. They're not going to be chasing whatever coin is on Binance about to IEO. And do you see that really changing the next few years?
Absolutely. Because I think what you're starting, again, this just proves how early we are, because what are we looking at and for fundamentals? Is it realized cap, right? Because market cap, traditional finance folks are not going to wrap their head around market cap for these things. Like, it doesn't make any sense. It's great for narrative and to put up, right? Just to say, well, Bitcoin's market cap is 200 billion, and you can relate that to some other assets. You're like, oh, it's super small. Yeah. But I think what Chris Berninsky is doing, Willie Wu, Nick Carter, a lot of these guys are starting to build a framework for, all right, how do we fundamentally look at what is the value, right? How do we put a value on these? And I think a lot of that is going to develop over time. And as the research gets better, you put those two together. I think that's when, the guys at Morgan Creek or whoever can sit in front of an institution and say, well, look, right, here's the research laid out, right? Again, the other thing is institutions, Bitcoin has a 10-year track record. Everything else is a couple years, and 10 years to large asset managers. They're like, are you kidding? It's like a day and a half to them, 10 years. They want to see, some serious track record of performance. And also, you look at what's going on in the global macro, economy right now. None of these assets have faced a recession and a true global meltdown. What happens then, right? So I think once that now, and I will say this, if we do go through a downturn, a big one, and Bitcoin survives and some of the larger coins survives, at that moment, it will really be hard for people who are on the sidelines to ignore it, to say, okay, this thing just won't die. It's here. And we'll see if people we'll see if people flee and they sell, or people rush into it, which you're starting to see a little bit happen now when we get crazy news like we did this week. Yeah. So I think all of those things combined, I think, add to your question, over the next 5 to 10 years, I think only then will institutions say, okay, this is going to make a ton of sense. But yes, the fundamental research is getting a lot better.
Yeah, we're actually working on our own indicator behind the scenes that gathers about 30 data points, including Willy Woos and all these information to spit out one sort of number or a one pager each day. So I'll share that with you once we complete it as well.
Yeah, please.
But
please.
How are the conversations talking about risk and volatility with new clients and even other financial planners? Do you still find that it's black and white? People either love it or hate it?
Yes, it's black and white. I think, right, trying to get the conversations about risk and volatility and setting the difference between the two is kind of hard to do with the everyday investor. What we try to do, we talk more to risk than volatility. It's easier to get people to kind of create a framework for them to just simply say, hey, if you had a choice of living on the first floor or the 20th floor, what would you do? And you'll get a good idea for how people feel about risk. And then you start to ask them, one of the questions that I ask is, what is your relationship with money? Just to get a feel for how they feel about money, right? Is it a scarcity mindset? Is it abundance, right? Then you even get into differences between women and men and how they look at risk. And also, again, the volatility argument, where if you can demonstrate over a long time period, listen, you'll ride the roller coaster, but you'll get to hear being able to create a framework and visually show people, I think, is really powerful. But yeah, it's black and white. I think there's been a lot of fighting this week about it. Bitcoin is risky, but it's super volatile. But if the standard deviation compared to gold and stocks. And so that's what's interesting about Bitcoin, is it confuses so many people, because it's like, well, is it risky? Sure. Speculative asset. Is it volatile? Yes. Has the volatility been decreasing? Sure. Will it decrease more? Absolutely. It's still very early, right? So, I think there's some financial planners and financial advisors that don't want to hear any of that. It's completely speculative. The risk is off the charts. The volatility is off the charts. Can't deal with it. What I tell them is, when you have conversations with clients, right? We were down from the peak 80, 90% last year. I didn't get one call, one text, one panic email, nothing. My clients were fine because they realized that comes with the territory. Now, when you have someone that's 60-40 and they've been investing forever, and now you want to put this asset in their portfolio, and then they log on to Yahoo Finance and it's down 70%, you're going to have that conversation a lot. So I think what advisors want to avoid is having that conversation a lot with clients, because it moves a lot. So if you have something stable in their portfolio, they're not going to be, tell me what's going on here. So yeah, I think that's really what it is.
So you were working during the GFC. What was that like at the time in terms of the sentiment? Was it everything had great around you and it really sidetracked you as well? Or you were the sort of person that was mindful and a bit of a gold bug back then? Or how did you see it play out?
Great question. So for me, to be honest, that was 2 years after I started working on Wall Street, and I didn't know anything. Like I was learning a lot. And I have a really cool story there, because one of the projects that I worked on, they used to have me come into office early every morning and pull all of this data and articles and stuff on subprime mortgages. I had no idea what I was doing. Yeah. And we eventually got bought by this firm. The firm is called FDI Consulting. They do forensic accounting. So geniuses over there. So they had me pulling all this data. I had no idea why every article on subprime and mortgages and rate changes and the Fed funds and everything. And I'm like, I have no idea. So I just used to compile it and send it. But long story short, they called it. And this was 07, right? So 07, 08, they were ahead of it. And they did a lot of business because of that, because they were in front of it. So for me, I was kind of learning on the fly. One of the larger clients of the firm, her husband worked at Bear Stearns. I think he was the second or third in line at Bear Stearns. And I remember her, I tell this story all the time. I remember her coming in the office and say, we lost 20 million yesterday. And she laughed. Yeah. And I'm like, you lost 20 million and you're laughing? Yeah. I think it was laughing with fear, but she was just like, what is going on here? And then, as I mentioned before we started recording, I was right next door to AIG. So they had all the cameras there, cameras facing up to see if anybody would jump, security outside. It was like nothing I've ever seen. It was unbelievable. Lehman goes under. A lot of Lehman alum were literally, I saw people crying like they just couldn't believe it. And it was just pure chaos. And I remember taking the train home, and I called a friend of mine, and I'm like, I don't know how much money you have or whatever. I said, I know you just had a son. Buy every bank stock that you can. I'm like, they're $2, $3. I'm like, just, and he was like, I know I'm seeing it or whatever. And everyone was so fearful. It was such, everyone, especially in this area of the country, were paralyzed. It was unbelievable. He didn't do it, by the way. But it was a very scary time. And I think what I learned from that is, again, hindsight is 2020. But now looking, being in the business now, 13 years, is one of the things you can't plan for at all is how you are going to react the day that happens, the days it happens, right? And that was, right, day after day after day. Just, I'm like, where does this thing end? So I think that's something no one can prepare for. That's not in any financial plan. That's nothing a financial advisor can plan for. There's nothing you can do to prepare for the emotion and how you're going to feel when you're watching your investments go down 50, 60% per day. Like, it's just unbelievable.
Yeah, maybe a lot of people have felt that sort of that gut-wrenching feeling with the altcoins going down 90% for sure. But what's it like being in the midst of that industry? Because a lot of people view them as the bad guys, and there's definitely wealth inequality. You touched on, black people not getting into stocks and that sort of thing. So obviously, I think you're a pretty good dude, and we get on really well in this interview. But then some people have this image of financial advisors, and particularly the corporates at the top. Are they going to walk away with $100 million bonuses again if we go through another downturn?
Yeah, rightfully so. And again, our business, again, as advisors, people look at us. We have a bad reputation as a group, Wall Street in general. And again, you look at, that's how Bitcoin came about. That's how the Occupy Wall Street movement came about. And rightfully so. The country bailed out banks. And look, they're up to their old shenanigans again. It's terrible. What's going on at UBS and Deutsche Bank, it's still continuing. And I think because they're in cahoots, the central banks of the world, the banks, the large brokerage, the large financial firms, they're all in bed together. So if this happens again, they're going to find a way to collude and do it. And people should rightfully feel that way. And that's one thing that I always tell people. But I think the beauty of it is what technology has done, and this has allowed financial advisors and a lot of financial professionals to do, is be able to constantly articulate their position. One, so they could be held accountable. Two, so people can go on my Twitter and say, oh, this is what Tyrone's a crypto advisor. I don't want a crypto advisor. Or I want a crypto advisor. Great. Or he feels this way about this. And they can make a decision of how they actually want to work with people. Now, the higher ups, right, the people who are making the really big decisions in the $20, $30 million bonuses they're not on social media. But I think there's a lot more transparency now than there was before. And I think that these people are going to be held accountable. I will say this, though. I do think it will happen again. But I do think what was very disappointing and disrespectful to the people, not only here in this country, but all over the world, is that none of these dudes went to jail. Right? None of these folks went to jail. There's some women involved too. They didn't go to jail, right? And that's ridiculous. So I think next time there will be some people who are going to have their feet held to the fire if you aren't transparent and you've done things that have been unscrupulous and hurt people. But again, I never begrudge people for feeling how they feel about Wall Street. They have a right to do that.
Where do you think we are at the moment in the macro environment? We've got Raoul Paul tweeting his threads, and we did a great interview with him the other day in Australia. We've got a lot of household debt. So do you see that this is going to be like a slow burn, maybe Japan style, because we've got too much debt, or do you fear another possible crash in the next 24 months?
Again, Raoul Paul is, how do you add anything after what he said? I agree 100%. He's brilliant. But no, I agree. I mean, I tend to be a glass half full type of fellow. And I think yes, you can't ignore the signs here. Our mercurial president is very much disrupting things. You have to look at, I mean, if you look at what Ray Dalio has said, right? He's looking at China now as everyone kind of looking away. I think there's a lot of things that is not being said that I think are some positives, right? When you look at, global poverty coming down, you're reaching, peak cell phone usage and a lot of things that are going on there. But to that point, the overwhelming evidence is that we are headed for some dark days. It just is. I mean, you look at the valuations of what's going on in Silicon Valley. You look at the valuations of the U.S. stock market. You look at 15 trillion of negative yielding debt worldwide, right? You look at central banks now in a race to zero. Household debt, as you mentioned, subprime car loans here in the U.S. It's scary. And it's, student loans is another thing. Something has to pop, right? Hopefully it doesn't all at once, but I think it's the signs are there. And I think the prudent thing to do is position yourself accordingly, because I do think within the next 24 months, there will be some cataclysmic event. And that's the thing. No one knows what it is, right? We don't know. No one can say they know. We can only speculate. And you can only prepare yourself to get defensive based on your own personal financial situation and where you are in your life.
Yeah, fantastic response. And I think it depends how that plays out into how Bitcoin reacts as well. If it's something that's like a slow burn and we see the banks, unfolding with their mischief again, maybe people just funnel into Bitcoin. But in a crash, I think you'd agree with this, that it's going to be a scramble for liquidity. Everything gets sold off.
Oh, yeah, absolutely.
Cool.
Absolutely.
I'll put the links to all your stuff down below, but any final thoughts for people at home, Tyrone?
Yes, here's what I would say. I think especially if you are watching this, I don't care where you are in the country and you are a person of color, we cannot afford to miss this opportunity. This is an unprecedented opportunity for those to finally get included in the financial system that has forever been exclusive, especially people who are poor. I don't care who you are, where you are in the country, what demographic, where you went to school, how rich, how poor. This is an unprecedented opportunity to be included in something that I believe is going to change the face of wealth all over the country. So I would encourage people. I always say this, I'm not here to change minds. I'm here to open minds. So I would encourage everyone, read, educate yourself, listen to this great pod, go on Twitter, just read and educate yourself over time just to see what's coming. Because if you look at some of the largest companies in the world, they're getting involved, and that's your sign that you can't ignore it. So that would just be my last 2 cents. And my mother would kill me if I don't do this. I'm extremely grateful and appreciative to you for having me on and extending your platform to me. I'm very humble and grateful. So thank you.
And I'm grateful that I reached out to you and we did this. I think it's been brilliant. People are going to love this. So thanks for coming on.
I love it, man. Thank you so much. I appreciate it.
Cheers, guys.